up market. Thanks, Jeff Pierce. Let's go to Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Excited as anyone, I'm sure, to see so much green on our official start to 2025 this week. Alan, what say you?
Well, I mean, we had a little pause in December, but obviously this is a momentum market. We're back above 6,000 in the S&P. We had talked a long time ago about 6,500 as the upside target. And if you take that 300-point drop we had here recently on those old highs, that brings us to 6,300. So, still 7-8% up above. But the NASDAQ is really where the potential push is going to be. If you look at it technically, don't think too much, but look at it technically, we could see 25,000 in the NDX.
All right. So that would be a nice little ripper there, solid 3,500 points.
Yeah, momentum melt up. I mean, we haven't really seen the melt up in the markets yet. I don't know how sustainable it's going to be. Now, I do want to throw out that I'm a trader, and I think this is going to be the greatest time that we've seen, in many, many years for trading, because there's going to be big winners and big losers. It's not just going to be the boat float for everybody. It's going to be big winners and big losers. The administration has their prophecy project here. They want certain sectors to succeed, and they're going to push them that way. So, hey, I'm going to follow the money. I'm not going to fight it. And there's going to be amazing, amazing opportunities with that support behind those sectors.
All right. Seems like today you're going for a more kind of secular theme, though, trading Unity software, which is more about the sort of image and 3D generation that some of this AI stuff is capable of.
Yeah, so this is not sexy. Now, in the past couple of weeks, I've traded Cisco, I've traded ARC. I've traded ARC to the downside, and believe it or not, with puts. And then you can see last week that little downside push when we made new lows, but didn't follow through, new swing lows in the S&P and in the NASDAQ, and didn't follow through, and had a positive close on the day. That was my signal that downside, little push was over. Now, looking at Unity, this is a stock that's traded between 15 and 30 for the year, for the last 10 months anyways. So it made an important bottom base back in August, and it bounced 75%. Now, it has come back, and now it's about 15% off its high just 1 month ago. But what I saw was that bottom base, and I saw that money flow. It leveraged long positioning in the options markets was a signal that someone was seeing something, and that stock had really good risk reward to the upside.
Okay. So you're looking for this to make some higher highs, continue this trend that it's been putting in since the low in the summer.
Yeah, so it's got a nice strong move here. Now it's paused, has given us a secondary chance to get in. Obviously this morning it opened up a little bit higher than what we were expecting. We're sitting around 25 right now. The $20 call is $5 in the money. I think it's trading for about 7. So now this is an important point as a trader and as as an individual. The question is, I never put in market orders. I put in limit orders. I was trying to get this option at 650. That didn't happen, but it's trading for about 7 right now. It's a May option, so I've got plenty of time for the markets to fluctuate up and down. But if in the next few hours, the next day or two, I can't get that 650, I might raise it to 7. But I want to get in on my terms, because options trading and trading altogether, obviously, is all about risk reward. We want to get in our terms. It's hard from a leverage standpoint if you buy, when things open up 5% higher, because once that gap gets filled or things pull back, then your edge is kind of taken away.
Got it. Okay. So you're buying the 20, which is, you're deep in the money right now on a $25 stock.
Right. Well, 20 is an important level because 22.5 is the midpoint of the action for the last 10 months. And 20 is the 200-day moving average. So when we moved above that 200-day moving average, that was a signal that bottom was in place. So that's at a very significant level to lean on. Now, like I said, if this stock doesn't relax at all and we can't get in at this 650 or 7 in the next couple of days, then I might have to raise my strike price, and I might not want to be that deep in the money. I still want to be deep in the money, but like you said, the delta on that's a little bit sweeter than I typically go. Typically, what I look for is an option that has a delta of about 70%. And then I can look for that to expand as it gets deeper in the money. But it acts like the stock. What I do is super simple. So for anybody looking in 2025, buying in the money options instead of the stock gives you limited risk and gives you bigger payouts on the upside from just modest moves in the stock. Like I said, if we just get back to that 30 level, this option, doubles in value, and we were at 29 or so just a month ago.
All right. Like it, software trade on a day in which the software stocks have proven resilient. Yeah, Alan, what's up?
I got to say Merry New Year because you weren't here last week to start the new year. So, I was working hard. Merry New Year to you.
Happy New Year to you. All right, the 6th. I guess we've got one more day. I think the Larry David rule is Jan 2nd.
And it's over. But
yeah.
you weren't here, so it does apply. That's why I wanted to throw it.
Where's here? Where's here, Alan?
Well, I'm here.
Where? Where's here? We weren't live.
I didn't do any TV with you since the new year.
Okay, yeah. So if we weren't here, then you weren't here. Appreciate it, sir. Thanks for the trade.
All right.
Good stuff.
Thank you.
Alan Luckman, Chief Market Strategist, BullseyeOption.com. Bye.